So what's the average mortgage rate right now? You've probably seen headlines saying rates are too high, but what does that really mean for you? Let's break it down because understanding this number can save you a lot of money and a lot of panic. As of late October 2025, the national average rate for a 30-year fixed mortgage is around 6.2%, according to Freddie Mac and Bankrate data. That's down slightly from last year's peak near 7.5%, but still well above the record lows we saw during the COVID years. Here's the part most people miss. That 6.2% is just an average. It's like saying the average car costs $40,000. Sure, but your payment depends on the model, the options, and the financing. Your mortgage rate depends on your credit score, your down payment, your loan type, and how long you plan to stay in the home. And believe it or not, 6% isn't as crazy as it sounds. For decades, back in the 90s and 2000s, average rates hovered between 6% and 8%. The 2 to 3% rates from 2020 and 2021 were historic outliers, not the norm. So while today feels high compared to recent memory, it's actually right around the long-term average. Here's the real takeaway. Your rate doesn't define your wealth, your strategy does. If you're only focused on chasing the lowest number, you're playing the bank's game. The smarter move? Look at your total interest cost, payoff speed, and cash flow flexibility. That's where strategies like the all-in-one loan can completely change the outcome. So yes, the average mortgage rate in the US right now sits around 6.2%. But your goal isn't to beat the average, it's to build a plan that keeps you in control. DM me the word rate and I'll help you run your real numbers so you can see where you stand and what strategy gets you debt-free faster.